So, hello guys, welcome back for the second day. I hope you kind of enjoyed your day today and did some practicing. If there are any questions from yesterday's session, if you have any.
So I have a candle question. So when you see a doji, so does that mean it could go either direction? It could be bearish or bullish, or it's just like taking a pause and then it will continue to what it was
Mm.
doing?
So, what did I say yesterday? Doji coming somewhere in the middle of the trend is not important, but if it's coming on the very important like a resistance level, then you can see it's gonna change the trend. If it's on uptrend, it will change it to the downtrend, and if it's downtrend, it will change it to the uptrend. Okay, so for
Uh,
an example, if you see here this
uh,
candle, this is kind of doji. Okay, this is kind of doji. It came on a trend line, and can you please allow me to record, Mohammed ji? Yeah, I am gonna give you allow to record local files. Okay, then if you see by at the term of the like a candlestick, this is bearish harami. If you see, like, this is like a piercing, this is bearish, but it came on the downtrend. It came at an important level, and then the price went up. Even though it was a bearish, even though it's a bearish piercing. If you by the terms of the bearish piercing, this is the perfect bearish piercing, but it did not go because it has to come on the top. Like this is, if you see here, this is engulfing, but it came on the trend line. Then the price fell. If you see, this is like a doji, and this was a big resistance area here earlier. The price always reacted on that area, right? And this was the
mhm.
doji. At the same time, this was a false breakout. You can see. Uh, every time once you have the like a uptrend kind of, like if you see here this one, like, okay, this one, look at this one, very small kind of doji. This is kind of more of a gravestone doji, right?
Mhm.
So those doji market went up. This is a spinning bullish spinning top, but it came in the middle, so we don't give value to those one. But if you see every time, whenever I have drawn my line, you will see those area got rejected, right?
Mhm.
Those area got rejected. Now if you see, and this is very good bullish engulfing candle, right? And then look at the price went up, right? And so here, look at this. It has to have the trend. If it's coming on a sideway market, it has to be here or here. Okay.
Mhm.
Yeah. So now we are going to, anybody has any question?
Yeah, Jagger, I got one question. If you can go back on this chart where it's at resistance and it goes above resistance,
Yeah, those are
so
the false breakout, you can say those one.
how could we have protected ourselves on that from what you're saying?
So for an example, this was like, I think you are talking about this area, right? Right, you are talking about
Yep.
this area, right? So that's
Yeah,
why,
that breakout
yeah.
there.
So whenever you say you went long here, say for an example you went long here, your stop loss was here anyways, right? Because you put the stop loss below it. And usually, kind of one thing which you need to kind of remember, whenever you see those kind of candles, like this is C here, this is kind of indications that the price might change. And this was an important level earlier. This was the important level before, right? That was like previous high. It could not close it before, like above the previous high. This was the high at the time. It didn't close it. So that means there are chances that there people who bought it here will get rid of it. People who bought it here who are stuck, they might want to offload their positions here, right? And even if you have got it, if you put just stop loss here, you would have saved yourself from like at least like within like 5% or 6%, you would have been out, rather than waiting for another like 10%, which was the price $59, and now the price is $43, $51. It came all the way to the $42, right? So
Yeah.
you would have saved everything by just putting small stop loss. Remember, the first stop loss taken is the smallest stop loss you can ever have. Initial stop loss is the smallest stop loss you can ever have. After that one, you will take a bigger loss. Okay, so try to have the small ratio like the stop loss, and sometime what happens, it will take your stop loss and it with the price goes up. But that's the nature of the doing the business in the market, right? So you need to respect those stop loss and say, yeah, it hit, that's fine. But after that, if you see, it respected every time. So if you are here, and if you like follow the Uber, whenever you see this kind of price, you wanted to make sure like you buy the op like a put or short the stock at the same time. Like every time, if you see here, 4 times, 1, 2, 3, 4, and after that one, what happened? Markets fail, the price went up like here, and the market gonna fall again like this. And if you see the pattern, as I said earlier, pattern was like this. This is the pattern,
Mhm.
right? Okay, anybody has any question? And then we can move on to the moving averages. Any question? No. Okay. Now, what is moving average? Moving average is nothing but gives an idea about average price for the particular days. Say for an example, if I say this is daily, and when I say 20 moving average, okay, that means the last price we will go back to the last 20 days, and the whatever days, what do you call, whatever the average price for that 20-day will be calculated in the 20 moving average. When I say 4 hours, that means you go back to the 20 bars, like those bars, like the big candles. You go back to the 20 candles, which are each candle represents 4 hours. So now you have the data of about 20 times 4 hours, that means about 80 hours, which is almost how much? 80 hours, that almost like 10 days data, right? But if I say 15 minutes, so you go back 20 times 15 minutes. So that's the data you are getting, about 300 minutes. That's about 5 hours data, and so on. But when I say like 50 moving averages, that means you're going back 50 days and do the price averaging, regardless whether it was like a, for in this case, for an example, if I go daily, so when I say the 50 days, let's say for an example, 50 days are here, right? These are the 50 days. So regardless of the price, what they will do, they will average everything. Like say for an example, price was like $1, then $3, and then 2.50, 2.5. They will total this price and divided it by 50. The normal way we do the averaging. This is the 50-day moving averages on the daily. If I say like a hourly, that means you go back 50 hours data. It won't consider the 51 data. It will just cover last 50 hours data. Okay, any question or concern? And then I'll say why it is important. Any question or concern so far? No. Please ask the question if you have it, because if you don't ask it, I won't be able to understand whether you did understand or not, because this is very basic and that might help you in the future. Okay, so what are the important moving averages we can see? For the important moving averages, yeah, you have a question? Oh, this is his participant. Okay, so okay, I'm gonna see text here. Wait, what is the text? Text, okay. So what are the important moving averages? 20 moving averages, 50 moving averages, 100, 200, and some people do use 400 moving averages as well. Okay, those are very important moving averages as per if you want to do the uh, like a day, like a swing trading. Okay, this is SMA. This is the simple moving averages. Okay, why simple? Because the thing doesn't become complicated when it's a simple. They just like do the averaging for the last 20 days, 50 days, 100 days, 200 days, or the 400 days. If when you say 400 days, that means like almost a data for over a year. Okay, so now for an example, if we go to the Uber, okay, and now go to, if when you go indicators, you just go here. You there are different indicator like here. You can there is a 5 moving averages, right? And then so what I can do here, I'm gonna remove those one, get the 5 moving averages. I put plotted the 5 moving averages. Once I've put the 5 moving averages, I need to see what kind of data I put. This one I don't want to use it. I will just use the another one. I have a couple of good. Yeah, this one is better for me. I don't like the complicated stuff. I just like the simpler stuff where I can just decide what I want to do. So if you see here, these are the EMA. We are talking about the MA. EMA is exponential moving averages. So I'm gonna unclick those one. I don't need it. I want moving averages, and you can change your value. So the first one I put like 20. This is 50, 100, 200, and 400. So those are the color. Green is, I always put the green as the smallest, and the black is the highest. Green, red, blue, purple, and the black. So this is 20, 50, 100, 200, and 50, 400. Okay. Now let's see how these things help us to figure it out. Okay. Let's start with the only one moving averages, like 2 moving averages. I don't want to make it more complicated for you guys. Okay. Now, do you see any coordinations here with the 20 and the 50 moving averages? Right? Okay, this one. What happened here? Like every time. So let's say starting from this one is here, right? What happens here? Anybody guess?
It becomes price rejection.
No, price, yeah. Price broke the 20 moving averages, and after that one, price fell. Price tried to break it higher, like a 20 moving averages. And what was the high at the time? This was the high of the candle at the time because it broke it with the like a force. It was a candle, and then it went sideways. Okay, the market went sideways. It did not make the higher highs, and then when it went up, it broke it again. Try to kind of break highs, and once it broke it 20, it got rejections at the 50. It finally broke the rejection, but this was the high, couldn't break the high, and the price fell. Okay, now if you see here, every time price was getting rejections at the 50, this is the simple moving averages. Okay, and then it started taking support at the 50. Okay, if you see further down, it took the started taking support, and this is 20. It took the support from the 20. Now is crossed the 20 here. That was a good golden crossover, you can say. Here, this area, it was a good one because they were like 20 was cutting 50 from the bottom. Whenever the smaller time frame, this is like a small, like a bigger bigger moving averages, and this is the smaller moving averages. Whenever the smaller moving averages goes from the bottom and cuts through the upper, which is higher time frame, then that means this one is gonna be bullish. Okay, whereas 50 is like here and the 20 is here. If the 20 is coming from top and is cutting and going on the bottom, that means this is very sign for the bearish. This is called a golden cross. This is called a death cross in the terms of technical analyst. Okay, everybody understood the concept of this golden cross? but for the day trading, we're gonna discuss more about the golden cross specifically for the day trading. Okay, did you understand this concept, everybody? Okay, and if you see here, once the price took support from the 20, it went up and then kind of took the support, didn't break it. Once it went up, broke the 20, broke the 50 at the time, went again to retest it, and what happened? Price fell. Price fell here. Must have took support somewhere here. We don't know yet what support, but took some support here. It kind of make the piercing candle, like here, went up, took some resistance here, kind of took the support here as well, kind of gave the false breakout, and here, and if you see one more time, 20 cut the 50 at the time. This was the area of your entry. Price went up, took the support one more time, couldn't take the support, and then break it 50, and now this is kind of went everything on a sideways here. And once the price is on sideways, you don't see more reactions here. When you have those kind of sideways movement like this one, that means you need to wait for this area, this breakout. Whenever you have the breakout, put your stop loss below this like a swing trade, and then price went up. At the same time, if you see the 50 and 20 were kind of crossing each other, and the price went up and kind of went like further up, and then as I said earlier, the price kind of started doing some consolidations, broke the consolidation, coming back again to test the consolidations. Now the time is to fall it down. So in that way, what we can say is 20 and the 50 moving averages are trying to provide you good support and the resistance at the same time. As we discussed earlier, support is your resistance and resistance is your support once they cross each other. When the price crosses from support and break it out, then it will come back to test it, then it will be like provide support. And once the price break the support and it try to go back up again, the support now becomes your resistance. So same way, the third 20 and 50. So if you are like a day trader, you still want to keep an eye on those uh, moving averages just to make sure like you are aware of some unknown support and the resistance in the market rather than just the trend line. Okay, now what I'm gonna do, I'm gonna turn on there was 20, 50. Let me turn on the 100 moving averages. Okay, now if you see here 100, why I'm showing you 100? Because you can understand how and where it can take the support. Did you see where it took the support? On 100. Okay, here it took the support after the breaking of 50, 20, it took the support at 100. Okay, now if you see here, once it broke 20, 50, tried to take the support at 100, couldn't sustain, fell. Here took the support here at the 100, like 20, faced the resistance at 100, took the support again, now took the support here again. Okay, now after that one, I'm gonna go and show you the 200 moving averages. Okay, now the 200 is purple. Okay, and I'm gonna take off the 20 and 50 to make it less confusion for you guys. Okay, so because this is the new IPO, this was her 200 moving averages. 200 moving averages is your strongest line of defense or the support. Okay, so if you see here, once it broke the 200, 200 was providing the good support all the time, right? See, 200 is providing good support, and even here 200 did provide some support, gave the false breakout, provide the support. So if this is broken, if this one is like 43 is breached, then you can expect this level of 38, because yeah, this is 43 is here, so you can expect the level of 38, And if that 38 is broken, you can expect the level of 34 for Uber. Okay, and this is just the simple logic you can understand from you using just simple moving averages. Okay, any question or concern so far? Why moving averages are important to know? Abdullah, you
Yeah,
have a question?
yeah. So I'm sorry. So it seems like intraday 20 and 50 are the main one.
No, I will show how the 200 up supports, how the 20 supports, how the 50 supports, and we are gonna use the EMA, not the MA. We're gonna use the exponential moving averages for the intraday.
Okay, so the ones that you showed were the SMA, right? The
Yeah,
simplified.
simple. It's
Okay.
very simple moving averages.
Okay, got it. Yeah.
Okay, so now everybody understood the SMA. How does it help? Now let's move on to the EMA. What is EMA? EMA is exponential. So what does it do? It gives a more preference to the recent data than the previous data. Say for an example, if I say the 50 moving 50 EMA, right, for the daily time frame. When I talk about the 50 EMA, that means like it gives the more preference to the like the recent 20 days, for an example, than the first 30 days. If you divide the like say 50 days, 30 days, like divide into like 25 and 25. First 25 days and the second 25 days. So it will give more preference to the second 25 days than the first 25 days. How it works, it will give the more preference to the like last the 50 days, then the 49, then 48, 47, 46. That's how the weightage is like kind of counted. So that's why when you see exponential, it is more reactive to the price. So for now, let's see exponential moving averages. We're gonna see this one. I'm gonna change the color a little bit just to kind of give you an idea. So this is EMA and this is 4980. So okay, now I need a 20 for you guys. This is 20. I'm gonna make it 20. Okay, and this is 50, 20, and a 50, which is purple, and here I'm gonna, this is 20, so I'm gonna keep it green, and the 50 I'm gonna make it as a black. Okay, this one I'm gonna make it as a black. Okay, now I'm gonna compare both the 20s. Okay, I need to change the color a little bit just so it can make it easier for you guys to do what colors. This one, so at least you can see. Okay, so if you see here, the green is the simple moving averages, right? Green is the simple and the orange is the EMA. Both are 20. Value is 20 and here the value is 20 as well. Now let's see how it kind of see. Do you see a difference between those two? Anybody wanna spot some difference?
Yes.
What's the difference, Venkatesh? What's the difference?
The EMA is closer to the bars.
Yeah, EMA is closer to the bar. Why? Because it gives a more preference to the recent price, whereas the SMA doesn't give the preference. Okay, so that's why EMA is more reactive to the price. So every time if you see, the EMA will act faster than the SMA. Okay, and even if you see here, when the price was falling, right here and here, price was falling. Once it broke the EMA like 20, which was closer, and then it took the first 20 EMA took the resistance. 20 SMA took the resistance here, but 20 EMA took the resistance already here, right? So you came to know resistance area on 18th of May, where with the SMA, you come to know on 24th May, which was like 6 days later. Okay, same way, let's see if the price has broken. Okay, okay, so here if you see, the price broke it first day on like 22nd of November, and on the 3rd November it gave the breakout, complete breakout on the 20 SMA. So you came to know at least one day earlier the price is kind of trying to breach the 20 EMA. Okay, let's see if here, even here, the price broke the like 20 and both together. But if you see here, this area probably it took the support on the 20 EMA, and then price went up. And even here also it took the support at the 20 EMA. When you took the support at the 20 EMA, that means you are kind of sure, like, something is happening. Either price has to go up. If it's broken, the price might go down. That will give you a proper, like, earlier indications. Okay, so that's why the 20 EMA or any EMA is better when you are doing the day trading. Let's see this one on the 5 minute chart, which is makes it easier for us. Is for 5 minutes, it's not gonna be big difference, but it still will help you to see the price reactions on the 20 EMA. It took the support here, took the support, broke it down, make those like a gravestone doji, and the price went up, took the support here as well, took the support. Now once it broke it, took the like once it broke it, retested 20 and the price fall. And if you see, the price is more reactive here. The EMA is closer to the SMA. EMA closer to the price than the SMA. So that's why when you do the different moving averages, it will help you to understand where it can get the support. Now that was the difference. Now let's see the 50 moving averages and compare it, and then I'll take the question. Okay, 50 moving averages is here. Okay, this is on a daily time frame. This is 50. Black is the EMA, and the purple is no, purple is EMA, black is SMA. SMA, the EMA, input value is 50, input value is 50. Okay, so here, okay, now if you see here 50 moving averages, let's see, it gives the better result here, like over here too. If you see, this is the black is the sample moving averages, and you can see the price was taking good support at the 50 EMA. Why? Because it was giving more importance data from, like, say, from last 50 days, whereas like, and with this one, like, more preference, and this one wasn't given more preference on the data, whereas the SMA gives equal weightage to everything. Now even if you see here, first 2050 was broken, took the resistance here, and here only kind of SMA gave you more faster result than the EMA. But even if you see here, the price rejected close to the 50 EMA. The price gave rejections at the close to the 50 EMA. So the 50 EMA or any EMA usually will provide you more weightage, where you can find some support and resistance without drawing a line. Okay, any question or concerns?
The EMA is calculated the same in like
They have the
TradingView and some others.
yes.
No.
So, yeah, usually, like, if you really want it, make sure, like, you go to the built-in. When you go to the built-in, that means they are the calculator, they're supposed to calculate it. But when you go to the public library, like the one which we are doing here, usually they are the one which is kind of calculated they want. So usually what you need to do, go to the setting and see what source they are taking to calculate it. So this is the close. So if I say open, okay, and if I click it, the price might change. So always remember, go to the setting and see what source they are using to count the price. And usually the close is more important than anything else. Okay, specifically for the moving averages and everything, usually most of the prices they count it based on the closing. Okay, only the VWAP counts differently. They count like HLC3. I think that's the way they calculate high, low, close. That's how they calculate for VWAP. But rest of them are usually the closing is more important when it comes to the counting. Okay, so make sure like this one is kind of clicked on properly whenever you are doing the calculations for the EMA. And if you don't know which one, just go here, go to the like built-ins. But the issue with these built-ins are like you are only allowed 3 free indicators. So that's why you need to do those kind of jugards where you can see, I can see at least like 6 EMAs and the 5 MAs at the same time. So I don't have to, I'm not restricted to use only one indicator, like a 3 indicators. Now this one, this way I have already calibrated 4 or 5 indicators in one indicator. That way it my without using like a more indicator like on over here, I can still use those one and it gives me the same result. So it's kind of gave away from the restriction is like 3 indicators you can use. So we are using like about 5 or 6 indicators at the same time without going into the indicators and like deleting and making new indicators all the time, selecting the indicator at the same time. Okay, any question or concern? And then I'm gonna show you how it's gonna help you in the your day trading for the moving averages after the CPR. Any question or concern here? No? Okay, I think everybody is so intelligent. They don't have a questions or they know everything. Okay, so now the another indicator which we're gonna talk more about is CPR. What is CPR? CPR is nothing but the central pivot range. What is the central pivot range does? If you go to your trading view and if you see the pivot points, these are the standard pivot points, right? And once you select those, I have to delete one of those one. Let me just remove this.
Sorry, real quick, which program are you using? What program? This is TradingView.
TradingView.
Okay.
Trading. Everything is on TradingView.
Do you recommend TradingView over the Spider, Trend Spider?
I did try to use the Transpider, but I didn't like it.
Okay.
Maybe because I'm so used to the TradingView, that's why I didn't like it.
Got it. Okay.
Pivot points, right? So these are the pivot. If you see this pivot, when I put the pivot here on a 5-minute chart, this is for the day trading. Okay, these are the traditional pivot. I'm gonna remove this one. So in the pivot, you have the central range. Okay, this is the central pivot. This is the like a normal pivot. This is the resistance. This is the support. This is the S3. Anybody use the pivot points in their trading or no?
I have recently.
Yeah, you have started using it, right? So usually what happens with the pivot, you only have one like a area here, right? And what happens those one, usually that area doesn't give an idea much because it kind of see too much conjunctions on that particular area. Even here the pivot is broken, so you cannot trust pivot like like this pivot to give you proper idea where you can put your support and the resistance, right? Even here it's kind of came tricky. But if we use the central pivot, okay, so now what I'm gonna do, I'm gonna draw a line for each pivot, and then we'll compare with the other pivot, okay? To kind of give you an idea how you can use this CPR. So this is the line I'm gonna draw for one pivot. Okay, so you will have an idea, and I'm gonna make this one as a red and very heavy line, right? So I'm just gonna draw 2, and this is the pivot 2, right? So now I'm gonna turn this pivot off, and I'm gonna turn my CPR. Okay, now if you see, it gave me the same pivot, but at the same time it gave me 2 range as well, right? So this is your central pivot, this is your up top pivot, and this is your bottom pivot. Okay, and usually what happens is when you have those like pivot range, like this pivot area, it kind of gives like a better idea for you to find your good support and the resistance, right? If you see here as well, it was kind of giving the support, and once it's broken, you kind of came close to this S1. It went up, took the like resistance. Here it took the support, then went up and took the support from here. Let's see, even here, the orange line is like previous day high, previous day low, okay? But the one which you're seeing like a purple and the blue, this is the central pivot, this is the top pivot, or this is the bottom pivot. And once this breaks down, always take the support here, and this one will act as a support or the resistance as well. Now if you see here, let me see here, first one acted as a resistance, broke it down. Even here, this is like a narrow CPR, and this, if you see here, it kind of give you like a good idea that it's providing me support. Does it make sense here? If you are using pivot, and now if you are using this one, it kind of gives you like a more idea.
Yeah, this is great.
Right? So now, if let me kind of go a couple of examples, right? But this is like a central pivot, right? And if you, this is like a previous day high, previous day low, and this yellow one which you are seeing in my one is a weekly pivot. Like, this is way I do drawing, so it will makes it easier for me to remember, right? You can change the color the way you want it. Okay, there is no restriction, you can change the color you want it. But and if you see, perfect example, very good example of trending market. Check it out. It took the support at the same pivot, break the high, break the previous day high, exactly at this S1. This was the S1, this is S2. It took the resistance, and then it broke it down and kind of took the support here. So it was a trending market, right? Whenever you have the narrow CPR, this is little bit of wider CPR. This is like a narrow. This is like a narrow. Whenever you have the narrow like a wider CPR, that means market will be on a sideways. Okay, but whenever you have the like a very narrow CPR, market will be like a trending more often. Like this is like a market is trending here. Okay, market is kind of trending. But when it's like wider, it will go sideways. When you have the higher highs, kind of, you know, from the previous day you took it this year, and this was like very narrow, which is an exception. Not all the time, but most of the time, whenever you have the narrow CPR, you will have the wider range, like the trending market. But when you have sometimes narrow CPR is very weak CPR, and the wider CPR is act as a good support and the resistance in the market. Okay.
And Jigar, this is Venkat. Sorry, I don't know anything about this CPR. Can you explain it briefly?
Yeah. So when you go to the FX, use type CPR, use this Gomti Shankar, because I find his CPR is better than anybody else. There are different kind CPR, you can do it. But for me, I find this one better, right? You can change it, you can experiment. There is no harm. Use it in experimenting, you might find a
Yeah,
better.
but what exactly it is doing? Like, what is it actually telling us? Like, because I know the moving averages means it's calculating the moving averages and like that. Like, what exactly CPR means?
CPR is also calculating the high and the lows and the price. So let's see how what the CPR calculates, right? CPR calculation lesson formula. This is the calculation formula. Okay, see, this is the CPR calculation formula, and this is invest formula trading. Let me put trading. Okay, then you'll get how to calculate. Sorry, where is CPR calculate? What the heck? Okay, let me just find a better way. CPR is here. Sorry. Yeah, this is the center pivot range. Okay, this is from the different Zerodha. This is from the Indian market, but this is the area. This is how the CPR is calculated. Usually they go resistance time pivot minus low, and the resistance pivot plus R1 S1. The center pivot is like a high plus low plus close divided by 3, right? So usually it's a range. Like when you say, is usually the range, like
Okay.
high, low, and the close, and then divided by 3, and then you'll get the CPR. But you don't have to do the manual calculations. It makes it easier for you to say put it on the chart and take it from there. Weekly CPR, monthly CPR are the same. Like if it's for the weekly, the CPR won't change it. If it's monthly, CPR won't change it because it's come from the previous data. Okay, so from the previous month. So in here, let me see. If you see the black line, yeah, here, that's my monthly CPR. So this will be the strongest CPR for the month, and the weekly CPR is the second strongest CPR in the month, and then the daily CPR, right? So, and the price kind of reacts faster, like very well on the monthly and the weekly CPR. So this one was monthly CPR. Like if whenever you see this kind of CPR, that the price is at the CPR, it's also at the weekly CPR, like the monthly CPR, it will be very hard. Whenever you see this kind of setup, that means there are chances that it will kind of fall. It will fall in the market. And even here too, when the price went up, it took it broke it. When it broke it, you need a good support, like good volume. And here, there wasn't any volume. That's why the price couldn't go up higher. And the black one is a monthly CPR. Even here, if you see the price fall from the high, this one, it couldn't break it the previous day, like CPR, and then it fall. So what does it do is kind of gives you like a better understanding how the price gonna react at the particular price point. Okay.
So this is more something you use
Yes.
before, not during the trade,
This is during the trade.
but maybe before or after.
No. This
Right.
is during the trade. This is during the trade.
Okay, for the most part, right? You're right. Okay.
Yeah. So you need to have that
During
one.
the trade.
Yeah, you need to have this one all the time.
Really? Okay. Interesting.
I didn't get the link. Please send the link for today. Who is here? Okay.
Jagger, how frequent is TradingView updated? Is there a 15-minute lag or?
No, this is not lagging.
Oh, okay.
This is like right away. Let's see ETH. We see like crypto, right? ETH USD. Let's see. Okay. 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 I'm gonna remove all those lining. Okay, because I was showing something to the other classes. That's why I have said the lining. Okay. So if you see here, right, is not lagging. What happened? Price kind of couldn't pass CPR, started falling. It was the previous day. This is the monthly and the weekly, right? And it's like at the end of the month. So now again it's going on the upper side, but it has a CPR here. Let's see here. Price fall, kind of broke it, took the support. This is like a previous day low, took the support, couldn't cross it, CPR, and the price fell. And if you see here, the CPR is already kind of making. So if you put this line here, this won't change for the entire day. Why? Because this one is taken from here, this data, right? That's why you're gonna have this data before you start trading. But the only thing is like you don't have to calculate by yourself. So you are relying on the system to plot it whenever the time goes. Okay, so it will look like this one whenever you are starting in the morning, and it will grow every time. And you will see here, this is like a pretty good, like a price action. The price is going up. So the chances of it to break this one and to come here is pretty much high. 25.42 is pretty much high. Why? But wait, see here, look at this price action. This is the good area of resistance. Now it gave volume, like it gave with the like a good big candle. So the chances of it to go higher up to this level is very much high at this point of time, because this is gonna act as a good resistance. But it has to break that central pivot. Okay, if you are taking a trade, you don't want to take a trade now, you just want to wait for it to break it. You just have to, this will, if you are entering, this will be your stop loss. You enter here and you will be, this will be your target, but you will be trailing your stop loss from here to here when the price moves here. Okay, we'll keep an eye on those one later once we kind of move, just to kind of see how the trade works. It's fascinating to see whether the price.
But so let me ask you, in that example, right? The risk reward is really bad, so it's not even worth getting into. Right?
No. Yeah, that's why I said if you really want to get in, because some people want to get in, you don't want to put your stop loss here. You want to put your stop loss here, right? If you're putting your stop loss here, this will be your target, but you are aiming at this one. That's why your stop loss is here. So you have to really pass this stage. Then you take this one and put your stop loss somewhere here.
I see. Okay, yeah, I see what you're saying.
Right, because this one will act as a good resistance. But why we are assuming it might cross? Because it kind of, this is acted as a good support area, and it kind of
resistance becomes support.
Yeah. So you are expecting this area to be get broken, but this gonna be like make or break. If the price react something, the price gonna fall from here.
Right. Yeah.
Right?
Okay. Yeah, that makes more sense.
Jagger, how can we tell if you go over to the left?
Yeah.
Right there, the price was acting as support on the black line.
Yeah.
But then,
this is whenever you have those, this is the monthly CPR and this is a weekly CPR. Okay. So that means like those are the good different area. These are your good defending area.
Then it fell apart. How can we, maybe I would have thought on the third one, hey, let's buy it here for another bounce, but that would have wiped me out completely.
Which one? Here, or like you're talking about this one, or this one? This is fun.
The third one.
Third one. Okay.
Yep.
So why you want to buy here?
Well, I'm saying if I look at the pattern, the first two times it gave a bounce, I would have assumed the third time was going to give me a bounce
Yeah.
too. But
So okay, yeah, if you have entered here for an example, what will be your stop loss? This will be a stop loss.
okay,
Yeah.
so we're always counting on our stop loss to save us,
yes,
not.
yeah. You always the stop loss is the only one which can save you. Nobody else.
But based on, would that be a fair trade if I had taken it?
Yeah,
Although it went against me,
but
would that be reasonable?
no, it won't be reasonable. Why? Why you want to take a trade on the red candle? Whenever you want to take a trade, say for an example, you want the price to be reversed. Like if you see here, both the time, what happened? What kind of candle do you see?
I see, yeah.
Yeah, and this is gravestone doji. If it comes on the bottom, that means the price gonna go up. And if you see here, and if you see here as well, this one is more of a gravestone doji, right? It has an important level. That means this was a reaction that to get the people out. The chances of the price to break higher, like on the probability wise, to touch this area is very high. Very high. Why? Because it broke the monthly CPR, it broke the CPR, and now is breaking the central pivot and the price. See, right? So now when your stop loss was here, you can put your stop loss here, and this is your next area to get out. And at the same time, if you see, there is no wick on the bottom. See, there is no wick on the bottom. So there is no seller here at this point of time. So you put your stop loss here and you are a little bit safer. So now your risk reward is better.
Yeah, because if you buy on the red candle, you're just catching a falling knife, right? That's pretty much what you're doing.
Yeah, because you never know what next candle gonna happen. Ideally, you need to wait another like confirmation. But because you see this big candle gave closing above the like a monthly CPR, it closed the like a weekly CPR, it break the like previous support and resistance area. That's why you can go higher. Like you can get convicted, but you can keep your stop loss here. Ideal stop loss will be here, but you can still keep your stop loss here. At least 50% of this candle. At least 50% of this candle. Below the 50%, you can keep your stop loss. And when the price is moving, as of now, if you see there is no buyer, there is no seller on the bottom, there is no wick on the side. And when you don't have a wick on the bottom, there are chances that there are very less buyers here, like very less seller here. And if you see, this was the good area of defend, which is broken, right? It was like area of defense which is broken, which is like a very good supply zone, right? So that's why you are seeing this reaction, because this is acting as your good supply zone, because price reacted so many times here. And once this one is broken, you will see this area, which is 2617, coming in no time. Everybody understood what I was trying to say? Like what I'm trying to predict and what I'm trying to see the price. And you will see those kind of area. And I'm not looking at 1 minute area. I'm looking at the 5 minutes. Right? So you need more patience on the 5 minutes. And if you go the little bit bigger time frame, 15 minutes, if you see the price is kind of making higher highs every time. This is on the 15-minute chart. Let's move on to the 5 minutes chart. And we are like almost 36 seconds away to price to get closing. It might get closing below this one. You never know. But there is no seller here. All are buyer. Your low is your open. Your low is your open. So that's a pretty good for you. But this is act as a good demand zone as of now. Like, sorry, good supply zone. So now this will be your next area of support, right? So let's see, 3 more minutes to 1 more minutes, 1 seconds to go. The price came and the next give open here, which is very good, right? It's opening higher. Let's see what it happens here. And that there is open is, as of now, open is still the high of the candle. It might come taste it and then it will shoot it back. You never know. Or might just take support from this black line, right? Which why? Because it was, we kind of determined that was like a good support or the resistance area earlier, right? But this is where demand zone is. Now, if this candle gives closing below this candle, like here, then you can expect the price to reverse from top to the bottom. Otherwise, it will start journey up. Anybody have any question or concerns so far or no? Any question? Hello?
None at the moment.
No, nothing.
Yeah, I had a quick question.
Yeah.
I'm just curious. Like, if you were to lay down the EMA on this, how would it match against the CPR?
Let's see. Okay, EMA which we're gonna use is a different. We're gonna use 4918 here for a day trading, and I'm gonna use a 200, 100, and let's put all the EMS. Okay. Now see here. The price is above, the green one is above the 49 for EMA. So you don't want to get out from the trade until this 4 EMA is broken. And at the same time, if you see, this is the 200 moving averages, which is very key average, right? 200 moving average is very key average. It is broken. So this will be act as a good area of support for you, because this is 200, this is bigger, which is bigger. And if you see here, it's taking like resistance every time, 200. And the 200 with the 5 minutes is like very less effective. But if you put less, 250 minutes, let's say 250 minutes. Okay, so now this is like this is 200, this is 100, this is 50 is broken. 50 is broken, you are here. Now your target is like 100 and then the 200. Once this one is broken, you can take this target. Okay, this is like your first target, this is your second target, specifically for the day trader.
Got it.
Right? And it will support, right? Let's see how does it support in the live market, right? This is on the 50 minute. Let me just put this CPR down. Okay, if you see here, and I'm gonna move, like remove some of the which unwanted for you guys. Okay, like 50 is purple, yellow is 100, and the black is 200. Okay, so if you see here, is kind of give the support, so that means you're sure. 200 kind of give kind of support here, broke it. Once the 200 is kind of breached, like breached, retested, and the breach again. And the price, if you see the reaction here, is drop, base, drop, and then took the resistance here again at the 50, like took the resistance here 50, 50. And now if you are saying on the 5 minute chart, what we discussed was earlier that this is good demand zone, like sorry, good supply zone. So now if this is broken, it might take the support from here and then will go up, or it breaks up, break this one, and then comes back to the 2458. Always the two possibilities, right? It's not gonna be like the way you think all the time. The price is gonna react the way it want to react. It not, but what you are doing is you are making informed decisions according to the price. Sometime what happens, this rally retracts to the 50% of this rally and then shoots up. Okay, so now the closing is more important. If this is closing above 25.07 is more important, and the price might go higher because it kind of gave just a little bit of retracement. It didn't give much retracement, just a little bit of retracement in the price, which is kind of still kind of okay after the big move, right? It started from like 24.50, went all the way to the 25.20. So now you have some kind of retracement, which is very much normal for any price to retrace a little bit. Okay, everybody understood on the CPR and how it can help us to determine our resistance and the support area? Any question, concerns? No? Okay. I'm assuming that there is no question. So now Sayed bhai, you used to use the pivot, right? So do you find it more better, this one?
Yeah, I like this, especially that band.
Band, yeah.
That
Right.
has that.
It give like an extra protection, right?
Yeah.
It gives an extra protection.
Yeah, because in the pivot, sometimes it's like in the middle, and
Yeah.
you're questioning where
should you put your
is it
stop loss?
gonna go?
Yeah, where you should you put your stop loss. And let's see, see, the price is kind of reacting at the same area, right? The way we kind of found. So from here, the next one is, we'll check it out here later sometime. What does the price react? Okay, so that will give like a more an idea. Let's see how our Tesla baby is doing, right? Tesla Inc. It was a sideways for the Tesla today, right? And at the C here, I'm gonna draw those lines. See here, it took kind of gave the support on the bottom. And if you have put if you were like a buying, your stop loss would have hit all the time, right? If you are buying at the Tesla, your stop loss would have hit all the time. So this CPR kind of gives an idea what you really want to do, where you want to put your stop loss. Okay. Now let's do the golden cross. What is golden cross we are talking here? Golden cross is nothing, but is the combination of three EMA. We are using three different EMA. One is a 4 EMA, second is 9, and the third one is 18 EMA. Okay, we are using 4, 9, 18. You can always use 5, 10, 20 if you want to, but 4, 9, 18 is better. If you want to use it, you can kind of change something. You can make it 10. Okay, it's not gonna make much difference. So with this EMA, what we are doing is we are trying to find the crossover from one moving average, which is like this is like a 4. This is okay, sorry. Okay, this is 4, the 9, and 18. Let me make it as a yellow. You want to look for those kind of combination where it kind of gives an idea where the price is moving. If 4 is bottom like this one, 9 is like this, and 18 is like this, and the price is like somewhere here, that means there are chances for the price to go down. This is for the day trading. However, if this is 18, this is 9, and this is 4, like going on the other side, wait, let me just kind of cancel it out. If this is 4 and then this is 9, this is 18 here, this is like 4, 9, 18, and the price is kind of here, that means price is gonna go higher. Let me show you on the chart. Here I kind of, you go and kind of plot it on the chart. 4, 9, I'm gonna put 18 here, and I will remove extra moving averages here. Okay. This golden crossover doesn't happen all the time, but whenever it happens, it can give you a good profit. Okay. No trading setup is perfect, but it might give you an idea how you can price react. I'm going to show you the perfect example, which is here. This is the 4, this is the 9, and this is perfect alignment. And whenever it happens, you enter, you put your stop loss somewhere here, write the rally. If you are a conservative, like who loves your profit more, you get out when the 9 is broken. If you are like not conservative, and if you are a risk trader, get out when the 18 is broken. Okay, understood? You enter when the 4, 9, and 18 kind of align. You enter somewhere here, write the trade until the price is going up. If you are the conservative traders, get out when the 9 is broken. When the price gives closing below the 9, then you get out. If you are a risk trader, get out when the price gives the closing below 18. Understood?
From your experience, how frequent do you think we can catch a trade that gives us this?
At least, let's say this is the number 1, okay, on the 26th of May. So let's take between the 29, which was like 28 to the 24th. Okay, let's take the 5 days and then see how many days it we get. Okay, this is the number 1 day. This is short opportunity, so that's another second. And how much it gives the profit? At least 2%. Okay, this is the number 3, at least 2%, and you got another chance here, 16%, like another 2%. Okay, this is kind of failure, so the stop loss hit. You can count this one because this was like a continuation trade. You can count at least 1% here. This is a failure, it didn't happen. This is, you can still count it because price, I'm taking just the 18 here, right? Otherwise you can take it here up to here, 2% here, 4 here. It gave the complete, actually it hit your stop loss twice, actually, like not the stop loss, but the you got out, but you get the perfect setup here. It's a rally here down, and then you get another 2%. So it happens frequently, like here. You see here, look at this one. It happens frequently, and the price kind of happens fall 3%. You get out here, and you would have got another 1%, 2% here as well. And I'm just gonna take it to you on the ETH at the same time. If you see here, it's taking the good resistance at the demand zone, which we kind of discussed earlier. Okay, just to kind of give you an update. So here as well, if you see, the price kind of fell. You would have almost got at least 2% here right away, right? And when you know the trend is downwards, you can always expect this kind of pattern. I'm gonna do it up, down, right? Because it's making a higher, like lower highs all the time, right? This high is always small, like smaller than the previous high. This is like a high, lower, higher lows, lower lows, lower lows, lower highs, lower highs, lower lows, and then the price kind of was downtrend. And at the same time, if you see here, what kind of candle we got it here? Anybody wants to say what kind of candle is that? Rejection of the price. Why is the rejection? The price rejected here. It was the high. This was the kind of sideways, and this was your resistance area. The price got rejected at the previous support area. You made this reversal candle and the price fall. At the same time, we got the confirmations from the candle as well. So that means the price is falling. Understood? For the day traders, understood these things? Here.
And now,
20%.
would this work for swing trading too, or like in a daily time frame?
It works daily time frame. Let's put it on a daily. Let's put it on daily and check it out. See here. For the daily, you give more preference to the 20. As long as the 20 is not broken, you can be in the trade. Like from here. Whenever the price is not even breaking 4 or 9, that means it's very bullish. Okay? But when the price is falling after the 20 and it's going below the 20, you can see the price is very weak.
Wait, Jack, just for clarity, do you have 20 or 18?
This is 18, but 18 and 20s are like price called nearby. Let me say, put it on 20, okay? I'm just gonna put the 20 just for the sake of putting 20. I'm gonna make this one purple as a 20, okay? Do you see much difference here?
Yeah.
Not much, because they are close, right? It doesn't make much difference, right? So it doesn't matter which one you use, but like a 20 is better, right? People use the 20. But when the price is like above the 4, that means the price is very bullish, and it's not even breaking 9, taking support from the 9. That means the price is very bullish. Once the 9 is broken, you can get out if you want to. Okay, see here every time, and this is like a sideways. That means like there is confusion in the market, so you have to wait for the breakout. This is the confusion in the market. You have to wait for this one to break, this area to be break, because it's the confusion. This one is also like a consolidation. Either it can go up or the down. You have to prepare for both. Everybody understood? 4918 golden crossover.
Yeah, just one clarification on which candle. I mean, when the day is going, obviously the first candle we can't pick up the price there because you still don't know.
For the 5 minutes, let's see here. You need a clarification first, whether what you want to do, right? Once you know when you are going to go short, that means you are selling. Just hold on a minute. I'm just gonna update. See here. ETH. Did you see this is a power candle on our demand zone? Power candle. So you have to. This might come. Just to kind of give you an update on those one, because I'm kind of watching that one too. So once this 18 is broken, you can get the entry over here, put your stop loss here, and you will have the 1:2 risk ratio. Short positions, you take it here. This was your resistance, and you can get 1:2 is your like target, and you almost achieve 1.8 here, right? 1.8. So usually 1.5, 1.7 is better, or 0.8%. This is almost how much? This is about 70. If I go like take from bottom to everything perfectly, it's 0.77% from where you took the entry over here. And if not, then your stop loss will hit here, which is here. Your stop loss is already got hit over here. That means once this one is broken, this is on a sideways today. Otherwise, it would have been like a nice trade, but like the Tesla is on sideways some days. Okay. See here, this is 100. If you remember, this was your 100 EMA, and it took exactly the resistance at the same 100 EMA. It's a very bullish Marabuzo, broken. So now your target will be 200 EMA after this one. So this will be your like will act as a good resistance area. This will be your good resistance area, and then this is your good resistance area, and this is your ultimate target here. Okay, we'll come back to that one later once and see the price, how the price reacts. Okay, because this is 100 EMA and this is 200 EMA, and it, if you see here, there wasn't much resistance here anywhere, but 100 EMA kind of give you an idea that there might be a resistance. Okay, so now on the Tesla, let's see here. Once the price broke, so your stop loss would have hit here, but once it gives the like proper, you would have got entry here. Why? Because this was the day's high, was broken at the same time. If you see, put the CPR, if you see CPR, it took the support from the CPR level, it broke it. So this will be your first target, and this will be your second target. And then you took the target, you either you get out here or you get out here, up to you. Okay.
Yep.
If you see here, if you're short here, you know this one is like the price kind of got rejected twice. This was like a good resistance area because this is the previous day high. This was the high. So when the price got rejected twice, it gave the breakdown around like both 18, 9 and 4. You can go short here. This will be your stop loss, and you go play. This is your first target. This is your second target. And if you have done that one, you would have achieved 1%. Understood? And if you are like conservative player, this would be your stop loss. If you take this is your stop loss, and if you are shorting from here, your risk reward will be like 1:1 only, not much. So if you put it here, your risk ratio is almost 2%, like 1:2. Right? Everybody understood how the golden crossover works? Any question or concern regarding the golden crossover? But this is for the day trading, okay, guys? So this might help you out for your day trading.
So with these golden crossers, you get the resistance levels from the CPR. That's how you try.
So yeah, no. CPR is already a different resistance. This will give you an idea where you want to get out from the trade. If you see that the ultimate aim is to get out with the maximum profit, right? So once you see this is broken, this will be your first target. You don't want to wait more. But if you see that this is still kind of holding for 9, you still want to wait more. Rather than getting here, you might be able to get out here. But once you are like conservative, once the 18 is broken, as I said, once the 18 is broken, you can get out. You don't have to wait more. Because this is your last line of defense to hold the trade. And if you see here, it gives, once you get the entry here, this is your like usually like a first target, this is your second target, but you are able to hold your trade up to here. Actually up to here, if you're like a conservative. So rather than achieving just like 50%, like $3 or $9, you were able to achieve up to $13. right? Because this is your first, this is your second, and this is pivot give you the second target, but you can still take a higher target if you know the price action. If you are conservative, you would have got it out here, 611. So you get it at like 598, you get out like 611. That's almost like a $14 profit. Okay, and your stop loss would be very low. If you see here, your stop loss would be here somewhere. Why? First, is this like a previous day low? At the same time, the price was making consolidation here. So this is like a good support area. So you put just your stop loss below it, and then you write the trade.
Okay, yeah, got it.
Okay, got it? Anybody has any other question? No?
So day trading is like you're saying 4, 9, 18. So like the other main ones like the 20.
20, 50, 100, 200. You can use it. You can use it for a confirmation. Okay. Let me put 200. This is 200. And this is 100. So once you know the price, first early in the morning, early in the morning, you came to know, like whenever you saw the price, you don't take a trade here, right? You are like not sure what's going to happen here. Once you know the price kind of break 200, it broke the 100. This is the last line of defense, and you take the trade here, and now this is your first target. But what happens sometimes, wait, you get the entry here with the 4918. Rather than getting entry here, you got your early entry. Why? Two reason for to get the entry. Once 200 was broken, 100 was broken, and you have the golden crossover at the same time. So if you are getting entry somewhere here, for an example, you can put your stop loss either here or here, depending on your risk reward. You know what I mean? Understood or no? I'm just going to remove this CPR for a while, because this gives the kind of confirmation. Sometimes what happens is, because of the pivot range, the price goes up to here and then it return back. So to avoid those confusions, once you have like a couple of confirmations, you can go long. Then you can take a good what you call decision whether you want to go short or long. Okay, does it give the answers to your question?
Yeah.
Okay, look at this one on the ETH, took the exactly at the 100. Now it kind of retracing, so the price gonna retrace, and then it will break. Once it break this one, you will see the 2055 and those one. Okay, I'm just kind of giving an update. Why? Just to see how the price is reacting, so you can predict in the future. Okay. Okay, so everybody understood the golden crossover? Anybody has any question or concern? Nope. Let's go move on to the another one, which is our Bollinger Band. Okay. What is Bollinger Band? Bollinger Band is nothing but a band given to you which will help you to find some good trade for some time, specifically when the price is consolidating. Where is the Bollinger Band? Yeah. Okay. This is the Bollinger Band. Usually when the price is kind of coming into the like a narrow, okay, then the price tend to give a breakout in one direction, like here. When you find the price is going on one directions along with the BB touching the BB, you can be with the trade. Okay, you can be with the trade. In the middle part, which you are seeing is your 20 moving average. This is like a +2 deviations. This is the standard date setting. You don't need to mess around this dating like setting. Why? Because if I rather than 2, if I put like 3, the band becomes too wide, and if I makes it 1, the band becomes too narrow, right? So that's why the 2 is like a standard deviations, and everybody uses the same 2 deviations. What does it help us to find out? It will also help us to find out like this: once the 20 is broken and once the price is touching that BB, then you can go along with, as long as the price is with the BB, you are with the trade. And here you entered here, you get out here. So you will achieve 1 or 2% here. Okay. And if you're seeing here, the small times, you can get like over 60% here. As long as it's above the 20, if you really want to be in the trade, you can be in the trade. Now, if you put 4, 9, and 18 along with it, I'm gonna move the 20 and the 50. I'm gonna move. Okay. If you see here, now this kind of gives the confirmations as well. Like the price is kind of touching the BB. That means the price is going high. It's kind of supporting the 4. That means you're on the right trend. You just want to hold until the 18 is holding, 20 is holding here in this case, and the price is holding 4. Once the price is breaking 9, once it's breaking 18, then the price comes down on the bottom. You don't want to go long when the price is below the 20 EMA. Okay, sorry, here. You don't want to go long on if the price is below here. You don't want to. You want price to move up, cross this 20 EMA, and then take a long shot. But if every time, this is the 20 moving, some simple moving averages as well. That's why which is very important. As we said earlier, the price comes to the 20 moving averages and taking the rejections, and then it goes trying to cross, and now it becomes like a more of a consolidating zone, right? This is like a more of a consolidation area for the Tesla. And what happens when the consolidations area was broken? It gave the good move next day. So you always want your band to get narrow, and once the band is narrow, then it kind of blasts either 1 or 2 side. And if you see here, even here the band is very narrow, and the next day, let's see if we continue here, the price is still kind of narrow, right? This will act as your good consolidation area. The price is taking the support from here to here. You would have got some money, but the next move, big move, will come once the price break this consolidation area. Okay, so this consolidation area is very important for you to focus on. This is like also called as a no trading zone. Why? Because price is not making higher or lower. So if you really want to get in the trade, you have to buy above this one or the sell below this consolidation area. Understood?
This one's a bit tricky.
Yeah. So this is more of a confirmation. But once you get some trade, you will get a better trade. Like say specifically when the price is walking on the BB. Okay. Whenever the price is kind of, you need to see when the price is getting consolidating, like making a smaller, like in the range, then it will break it. And to get these confirmations, like when the price is making lower high. So if you see, even if you got it here, when the price is breaking 20, you got it here, you would have made 1%. Let's take some more example. Okay, let's take some more example with the good, very good example sometimes. Yeah, here, like price was making like a consolidating, this was broken, and this kind of gives you like a bit of an idea where the price is moving. Like as long as it's touching the band, that means you are in the safe zone. This is like a more of a confirmations. You don't have to take a trade if you don't like, if you're not sure how you're gonna take the trade. But like if you see here, Whenever you see this kind of prices kind of making like a narrow range, you can expect to bend to get wider. Once the band is widened, this is like a after hours, but once the band is widened, you will see either the price goes up or the price goes down. As long as with the BB, you are with the trend. You are gonna be in the trend. Okay. Let me show you some example if I can find it. Some good example. Let me on a daily time frame. Let's put it on a daily time frame. Here, check it out. This is on a daily time frame, right? It's more powerful. Look at this one. If you don't know, the price kind of narrowed and it get the blast. So you take the trade, you hold on to your trade as long as the BB is like price is not breaking this 20, you can be in the trend. And the price has a tendency, whenever it goes outside the band, it will come inside the band. Okay, so whenever you see the prices are outside here, that means you can expect the retracement. And when it's outside, you can expect a retracement pretty soon. Sometime it goes a little longer, but the retracement you can expect, like because the price is outside the band. And also one more thing, this BB also act as your good resistance area and the support area. Understood? You won't be able to get it everything what I'm kind of teaching, but like you need to focus, like you need to kind of practice. If you see here, this will act as a good resistance area. If I put it here, like this is our ETH, which our example is, I'm gonna take it out here. Bollinger Band. See here. Check it out. See, the price was kind of narrowed. I'm gonna remove everything here, make it more easier picture for you guys. If you see here, price is kind of making narrowing, is kind of going into the consolidation. Once it broke the consolidation at this area, you can hold this entire move. Why? Because the price is touching the Bollinger Band. You would have made at least 5%. Understood? And when the price went up away from the band, you are away from the trade. Okay, does it make sense here? This is on a 5-minute chart. Okay, this is on a 5-minute. So once the band, like a band blast happens, like the price started walking on the band, you can have a pretty good trend. Like this is kind of straight because it was here. Look at this area. It was, price was breaking, like a consolidating, and then once the price kind of break that consolidation area, the price kind of give blast on one side, like band open up. Once the band open up, you can be with the trend and you are get out when the price is move away from the trade. Everybody understood?
Yeah, it seems like a better confirmation tool with like the moving averages.
Yes.
Than just an independent go upon this.
Yeah, you can take a trade along with the BB as well, but you won't get the money trade with the BB. You won't get the good trades, like not a man trade, but like at least when you are like doing the swing trade or the long trade, you really want to, let's see how does this works on here. Okay, let's see. Like when you are, say for an example, sometime you got on those kind of trend, you still want to ride that trend, like you, and you can get out here somewhere. Because why? because it's moving away from the band. So if you're doing swing trading, almost 80% move on the ETH, right?
See the thing, I mean,
Like I'm putting on the any stock which you was Uber, let's say, okay?
no, before you go to that, like just the,
Which one?
like it touches that BB, you know,
Yeah.
one or two waves before it, and then it comes back down to
Yeah.
20, goes below 20.
Yeah.
I mean,
Yeah. So what I said, once you
I would get thrown around left and right and then be
but
completely frustrated
but
and lose the rally.
no, again, there are two ways you can trade this one. You don't get out until it gives the closing below the 20. That was the first rule.
Oh, closing. Okay, yeah.
Closing is more important. Okay, so you don't
Gotcha.
get out once the price doesn't give the closing below the below the 20, right? Or the second way is you can be with the trend and get out when the trend is out, and you have to wait. You don't get out all the trade. You have to wait for the price to get narrowed down. Okay, let me see here if I can get the narrow. If you see here, the price has to get narrow. Look at this one. I'm here. See here, this one, this area. This is on a daily. This is more powerful. Once it breaks those kind of a consolidation area, then you take the trade because the band is widened, and from here till here you can write the trade, and then you get out because you are in the swing trade. Or if you are a risk trader, you hold it and get out when the 20 is broken. It's your decision. But when the price is here, at least you're not getting opted out here. You might be stopped out because of the trailing stop loss, but you can still confirm that, okay, this is still a good trade, right? This is like a narrowing here. This is like accommodation. So once this one is broken, you can get it again, and this will be a stop loss here, like out here somewhere. Okay, and if I put like Uber, let's say put it Uber, somebody has Uber in her account, so let's put Uber. If you see here, the first rule was the price has to be in a range and the narrow CPR. So when this one is broken, you can expect at least 5 to 10% move from here, at least. Holy, let me see. Yeah, up to here. Not that much. It gave like 20% just with the BB, right? But then you don't have to use BB here. Why? Because the price is not narrowing anyways. The BB band is not narrowing. You want your band to get narrow, right? You want the price to move in the certain range. And this, sometime when it breaks it 20, that means you don't want to go long, at least. You don't want to buy the stock when the price is below 20. This kind of gives like a filter it out. Yeah, better way is to go for a weekly. Weekly is more better because weekly is more powerful than the daily. So now, do you think like you wanna get into the Uber at this point of time? No. Why? It's not even respecting the 20 MA in the weekly. Why should you respect the price? Why you should respect the what's Uber? Because the price is below 20 on the weekly basis, right? On a weekly basis. You don't want to respect Uber anymore. Tesla, let's say Tesla. See, the price is below 20. It's kind of making, it kind of made like a doji, which was a support area, which was like a good support area here, right? So, and gave the closing above. So where it gonna get the resistance here? $700. That's where it's gonna resistance. First resistance will come at 665 kinda, and the second resistance will come at 700. What's our EMA is saying here? Okay, this is above the 50 for sure. let's say 20, and it's gonna face resistance here, 658 before 665. Because why? This is EMA, which is more reactive. So you're gonna face resistance at 660. And if you remember 2 days ago, I said, yeah, 630 and the 658 is the next resistance level for the Tesla. Once the 630 is crossed, give the closing above the 630, you can expect the 658, and then you can expect the $700 resistance for the Tesla. And this is also a good area of resistance at the same time. Right, I'm gonna make it nicer. Yeah, $700. Okay, so that's where you can predict because I'm on weekly. Everybody understood the Bollinger Band? Okay, I'm assuming that everybody understood. Now, the next one, which I would like you to know, is Fibonacci. What is Fibonacci? Fibonacci is like a sequence which is around us. They measure for the Fibonacci, they usually say like 1 plus 2 is 3, 3 plus 2 is 5, 5 plus 3 is 8, 8 plus 5 is 13, 13 plus 8 is 21. Those are the Fibonacci number and so on. So you add the first number and the second number together to get the next Fibonacci number, and then you add the second and the third to get your fourth Fibonacci number. Those are the Fibonacci numbers, and it's kind of said like every price, every patterns in the world work around these Fibonacci numbers. So how you draw the Fibonacci? To draw the Fibonacci, what you do, you decide your swing or the low or the swing of the high. So for an example, and everybody can do the differently. So this is my low is here, and this is my high. So you can expect, because I don't know about the left right side, as I said. So I'm gonna draw the line, which is 23.6. The second is 38. This is 50, then 61.8, and I'm gonna say 78, right? So usually I'm gonna turn this off. Fibonacci price usually respect those area, right? Without even me doing anything, if you draw it perfectly, you will see the price kind of gives some reactions on that particular price point. Usually, sorry, usually the Fibonacci number, which is here, 61, 50, and 38 are the good Fibonacci number to get your support and the resistance. But if the price is coming to the 23 levels, like if the price is going up, take the support from the 23 and goes up, that means it is very bullish. And if the price is coming from the bottom, take the resistance at the 0.78 level and falls back, that means the price is very bearish. Okay, how you can use it for your day trading? I'm gonna go on a 5-minute chart, cancel it out. I'm gonna cancel this here. Okay, so I don't know anything about the right side, so I'm just gonna focus on left side. Usually what you can do, put the Fibonacci number high to the low here and extend it. I'm gonna, sorry, I'm gonna extend from here because this is my low at the time. Okay, this was my low at the time. So now you can see here, when the price fell, it took the resistance at almost 78 level and then fell again, and then it broke the first 78, then 50 and the 61, and then it made the high. At the same time, if you know a little bit of a trend line, you can see this is like a M pattern here. It makes, once this is broken, the price can fall down. You can expect when the price falls from this is like 0.48, so you can expect the 0.48 your risk reward ratio. Here you achieved at least 1:3 because price broke the one pattern here. So you can expect the price to fall further than at least the whatever the one side. Okay. Let me see if I can draw the Fibonacci here. Let me
Does
draw.
the W work the opposite way?
Yeah, W worked as well here, and I can show you the W how it worked. Gonna free. If you see here, this was the trend line for the W. This is like a double bottom here. If you see here, this was the height 0.70, and you will achieve at least 1%, right? At least get 1:5 risk ratio. This was your trend, like a WS pattern. This is your W pattern. This is your W, and this is your M. Usually, like say, when you say W and M, it can happen in any direction. Okay, it can happen on any direction. So you just have to figure out where is your neckline. When you connect, why I connecting? Because these are like good. If I want to connect trend line here, this can be a good trend line, and but this is not respecting. You can create this trend line if you really want to. This is good trend line. Why? Because it was acting as a support, broke it down, tested, came back, tested again, and once it broke this trend line, which is sorry, once this broke this trend line, I'm gonna make it nicer. So this is your neckline, this is your double top, and the price fell down. So if we go correctly here, this is 0.78, and at the same time, if we go from here, is 0.95 at the end, right? Now let me see Fibonacci here one more time. Fibonacci, where is here? This is my high, and this is my low. I don't know anything about this one, okay? So I'm just gonna draw here. This only this pattern. I'm not drawing anything else. Okay. So if you remember what happened with the Fibonacci, I didn't know anything about this one. I just knew only 1, 2, 3, 4 candles. I just drew the Fibonacci, and then when the price went, and you can see here, the price reacted exactly at the 1.618 level, and then it got retraced, and every time it kind of gave the support at the 61, broke the 60, 50, took the support at 23.68, and then try to get again here, so take the resistance, and the price fell. And every time if you see, it kind of it at least gives some pause. Okay, it gives some pause on each level, and it took the support here finally. And then at the end of the day, when it gave the closing, it still gave the closing, first stopped it here and then went up. Does it make sense?
Yeah, so
Fibonacci?
the Fibonacci seems more accurate than the CPR.
No,
No?
it's how you draw it. That's
How you draw it? Okay.
yeah, how you draw it, that's how it's more accurate. But CPR is like a more accurate because you're not gonna draw this one every time, because this Fibonacci, if you really want to draw the Fibonacci the way it's supposed to be, is from the bottom to the high, it's supposed to be like this, right?
Oh, really?
Right, because it's made, the chart is already made. That's why for me it's very easy. But when you are like doing the accurate charting, like say first 2 minutes, like first few minutes, even if I say sometime I draw the only one this chart, okay, just only this one, you just want to see the 50% of the candle, so you just draw the, take the high of the candle, take the low of the candle, and kind of expand. Okay, I'm just kind of expanding here, and if you see here, price took the rejection at the 50 level first. If you see that it was weak, And the second also, there was a rejection at the 50 level, right? So now what you do as the time progresses, you move your, because this was the first candle, now this is your low of the day, because I'm on like 935. So now you can see the price got rejected at 35. And when you move on to the third one, the price kind of still not going further down, like because this is done. So now you have to focus on the fourth candle. It got rejected, and the five, this is the low of the day. The fifth candle is also got rejected. This is the still low of the day. You can still kind of do this one, and then this candle comes in. This is the low of the day. The every time the price is getting rejected here. Now once the price is kind of gave above the closing of this candle, so your next target will be this one. Sorry, this is your next target. This will be your third target, and this will be your fourth target. Okay, and this will be your the last and target. This is your like last target. And let me put on the CPR at the same time. I'm gonna get rid of the fib retracement. And if you see here, price kinda reacted. This was the CPR, and this was the our line for the Fibonacci. But at least you know sometime what happens. The price comes here exactly at the CPR and then fell, but it took the support at the important fib level. So you can see this is might be a retracement. And if we add our 4918, let me see here if I can add 4918, remove everything else. Okay, I'm gonna remove cut. Okay. Okay, so now this is like a three things at the same time. You got the confirmation here because of the golden crossover. You got your target because of the pivot and the fib. And then with the pivot also you can choose the Fibonacci pivot. Okay, there is also a Fibonacci pivot. You just have to go to the setting and you can choose the Fibonacci pivot. And if you see it takes the support, and that means you are sure that okay, it's taking a support, let me just wait. If you are a day trading, and if you see here this important level, even though it broke the 18, it's at the important level, it's kind of still holding that level. You might want to wait, like put your trailing stop loss from here to here or here close to, and then you might be able to ride the trade again. Okay,
Yeah, got it. Okay, and I was going to ask you, do you find that some tickers respect certain analyses
most of the
more,
no
or
most of them will announce like which sticker you want. Don't tell me the penny stock, okay? Don't
not, not no, let's say for example, you know, like one of, or maybe you know the
let's say NVDA. We talked about NVDA yesterday, right? Let's see
yeah,
how does it
it actually blew up surprisingly after.
no, let me see.
Yeah,
I didn't see it. I did not see it. See here, what did I like yesterday when we talked about, when we said here yesterday, we say like this is very important level, and if you see here, it gave the closing above that level. We discussed about that one. So now, and this is very bullish, right?
yeah.
This is very bullish. So that means is the trend has started again, which was from here to here. So this is the new trend. So let's see let's predict. Right? Let's predict. This is the low, this is the high. Let me see. I have to kind of, this is the low. There is a called Fibonacci retracement in the extension, but you can use, if you draw correctly, it's fine. So next target, because there is no territory, or like this is the like a new territory. So for you to take a target will be like 772. And if you remember when we talked about it, we kind of did this one, which was like 27% or the 135. So up to, it's supposed to come here like $800 or $900, right?
Mhm.
So it blew up like 5%. Wow, right?
Yeah.
It gave the closing. So if it has to fall, it has to fall here. That was our like prediction that if it's falling from here, and this will be like next target. So the next target is achieved. So the next, you can wait until like 772, because this price, and again, let me see. I'm just gonna wrap it up pretty quick now. I'm gonna remove everything, and let's draw here retracement. Okay, this was the high until yesterday,
Uh-huh.
right? And this was the like low for the swing, right? So it did not give closing at this level 607, so you can expect the price to go higher. Why? Because the price did not come here. If it has want to retrace, it would have retraced up to here, but it did not. So that means the price is still bullish. It gave the closing at the high. It's all-time high, I think, for the NVDA, right? And at the same time is respecting this trend line. I'm guessing it will respect. So if it has to fall, it has to fall from 664.
So right now it looks like it's gonna go up to
664.
664. Yeah.
664, and then the price action will come. It might retrace a little bit down, and then it will break up.
Mm.
So how the price action will look like? It will go here, might retrace, go, come back again, and the new trend starts. Okay, this is how it's gonna work for the NVDA, because it's kind of respecting the same
Case.
trend line.
The bearish case would be it's gonna.
There is no bearish case yet. And if you see
Hmm.
here, let's ask BB, what's the BB is saying.
Mhm.
BB is about 20. It's kind of going up on a weekly BB and then the monthly BB. Like there is no bearishment. And if you see here, this one, as we talked earlier, we talked about this level as well. Do you remember? We said this is like a good. How does the price gonna react? Goes up, take a consolidation, breakout, and then goes up from here to here, which is like $200 or $300. So, and then we put like $300, which was like about $1,000. So we give like $1,000 for the next year, right? Almost. Yeah.
Mhm.
And why? Because this is very bullish on the monthly, right? And
Yeah.
if we ask our 4918, what does the 4918 saying us? See, on a monthly basis, is very hard for the price to break even 4 months average. When it says 4 month average, so this is like 1, 2, 3, 4 months, is very hard, and this is very bullish at this point of time. So if the next month, if it gives closing below here, the price will decline, which I don't think so it's gonna happen as of now, but we'll see. But $1,000 is coming. Okay, and anything else? Anybody has a question or concern so far?
Yeah. So I guess my question is, in general,
Yeah.
there's always a gray area, right? When you're predicting,
Yeah,
forecasting, right?
Yeah.
Or the trend of a stock.
yeah,
And that is heavily dependent on your sentiment of where it's going, right?
the way you look at the price. Okay,
Right.
the like, for me, if I am seeing different, like whatever I'm seeing, it might be completely different than what you are seeing, right? Because it's
Yeah.
the same chart, but the uh, the reading is depend on the individuals.
Right.
Even
Exactly.
if you have the 10 years of experience or the 1 month of experience, you might see the chart completely different the
Right.
way I see the chart. So
So I guess is there an absolute correct way of always doing it, or no, there is
no,
not, right?
there is none.
Okay.
Say for an example, when we were like doing Tesla here, right? Sorry, we were doing Tesla, and 5 minutes chart, right? Was it this one or the other? This is 5 minutes, or this is NVDA. Okay, okay. Look, for the NVDA, if you see here, how does the price reacted? What did I say? Price goes up, take a pause, then it shoots up, and usually it shoots up the same area, like 3%, $18 or 3% here. It gives like 1% here, like from top to bottom. So it's kind of gives almost the same, usually the same. And before that one, this will be BB will be helping you. See here, BB is kind of helping here. See, the price kind of making, since 2 days it was in the consolidation phase like earlier here, and then when it break this trend, see, it was closing, it was going close to the BB. You can get it out here if you want it. And look at the 4918, what they are doing. Let me ask the 4918. I'm gonna remove the BB. If you see here, price did not close it below 18 until here, right? And it was respected, like see, 9 respected, again respected, again respected. And if you see, this is the classic case of golden crossover, right?
Mhm.
And it happens just today. Right? And at the time, see, the price was like not making, it was kind of sideways for
Mhm.
3 days. And if you
Right.
see here again, look at the NVDA, big rally, and it gave the signal to get out here. It was so bullish from here. You would have you can get it out here if you want to, but you can still ride up to this trend. When the golden cross curve gives, it gives like a hell lot of money.
When the golden cross, you mean? Oh yeah, okay.
Yeah.
Yeah. Yeah, so I guess how precise is the like how many, what's the percentage of it being accurate, the if golden cross, that it's going to
So
actually
no, so there is no absolute like percentage for anything. What you need to do, like once you have the setup, you have to take a trade
Mhm.
and take a trade and try to get at least 7 or 8 right, or 3, or couple of them will be wrong. But whenever it goes the way you want it, you will get like, say here, almost 3%, right? So you will get the big move on those, and this one is also like about 2%. So you just need to see how many percent. Look at this one, right? Up or the down, it gives the good percentage. You just need to, sometimes your stop loss will hit, but that's the part of the game, right?
Mhm.
You will see like more often once you know. And at the same time, if you know some of the little bit of like the technical analysis, this is like for me like AM, right? So I know this one is like a breakdown, I know this was the resistance, I know this is like a day of the low, like a low of the day. This price, once it broke, this is like price fell, tested, and then fell again. And at the same time, when it came again close to, didn't go up, you can short it again here.
So I guess okay, so I know like statistically certain uh patterns are more accurate than others, right? Or more likely to be true.
No, like
No?
no. So you need to, sometimes what happens, you need to just wait for the breakout. The price is going like this. Sometimes
Mm.
it goes like what, like the funny thing is like this is bottom, like this is top, this is bottom, this is top,
Mhm.
bottom. And if it is breakdown, you will say, okay, this was the double top pattern. Okay.
Mhm.
However, If this one breaks from here, you will say, oh, this was the triple
W,
bottom
right?
pattern. Yeah,
Right, right.
it was a W, right?
Mhm.
But the price, the way it comes depends the way it goes. Like usually, if it's going up, channel is like down, then the price goes up.
Mm.
If the price is going up on a channel up, then it will fall down,
Mm.
right? If it's like fall coming up, say for an example coming up, I'm gonna remove this NVDA. So I'm gonna remove everything from here. Price is coming up from down, then it will make up, and then it will fall. Why? Because this is how the channel works. Price gives the
Mhm.
breakdown. And if the channel is like this, up, up, down, and if channel is like sorry, this one probably will go up because this channel will go up. If the channel is like here, price goes up, down, 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 probably because the price came from here actually. And then the price coming here, the it's kind of forming the channel like this, going higher, then it will fail because this is will be acting as your resistance. So some patterns are very easy to find, some patterns are not easy to find. MW, you can find it everywhere. M, head and shoulder,
Right, right.
reverse head and shoulder, you can find it everywhere. Peanuts, you can find it, or the like the triangle, this one, you will find it everywhere. You don't have to remember the name, but you just need to see the how many trend lines are connecting, how the price is kind of reacting to the trend line, and whether what side is gives the breakout.
Okay,
Okay.
got it.
Okay. Everybody understood? Anybody has any question or concerns? Because we are almost like we are done.
Mhm.
We are like over the like 150 minutes.
Uh, Jigar, I was wondering, can you send us the videos so I can
Yeah,
review the weekend?
yeah. I will. Once this one is done,
Mm.
I'm gonna upload the first one, and once this one is like done, I'm gonna upload the second one too. So I will do it right away today. And
Okay,
Nizam bhai,
perfect.
yeah, Nizam bhai, I hope uh, you understood the second part because you had missed on the first part. I think he's recording as well, so he should be good. Okay, yeah. Anybody has any question or concern? If
No, I guess last question. Is it worth paying the Trading View subscription?
you
Yeah.
can pay, but pay it at the Black Friday because that's where it's most cheap.
Mm.
Otherwise, it's like very expensive.
Mhm.
But I'm using the free version, and still I'm able to use it completely. So you don't have to pay it. There are the good feature which I like it, which I miss it now, is the alert feature, which is not available on the free version.
The what feature?
Alert, like if you put out, say, if you have the breakdown, right? You are like
Mhm.
expecting the price to break it down, so you
Mhm.
put the alert. So you
Oh,
don't,
the alert for you got alert for yeah,
yeah,
yeah. Okay, got it.
yeah.
Yeah.
So
Mhm.
that makes it easier for you. Where here you can only put one or two alerts. So
I
that's kind
see.
of annoying, right? But you can always pay for it, but during the Black Friday is very cheap.
Black Friday, but that's November, right?
Yeah, but
Uh,
like you can, if you
yeah,
if you pay it now, but if you don't know how to use it, why to pay it?
yeah, that's true. So just practice on the free version until
Free versions, yeah, until
yeah.
you are confident that it's
Mhm.
worth money, then you pay for the like the paid version,
Yeah, yeah, I got it.
right?
Okay, okay. And I guess last question for me is: do you use any algos?
No, I don't use algos at
What?
as of now.
Okay, and you're not really day trading, so you
Network,
don't
no.
use scanners, right?
Like, I don't use the scanners. I usually what I do, I usually have like my like say for an example, watch list, right? I put it
Uh
on
huh.
the watch list. I edit on the watch list. Once I have the watch list, I will just see what kind of stock I want. Like for an example, this is Pi, right?
Okay, so you're like large cap.
Yeah, I like
Lar-
I play the options,
Yeah,
right? So for me, this gives like a more beneficial because I
yeah.
know how to trade those things, and that's where the most
Mm.
money is. And sometime you make like most of the time you lose the money, but I'm still
Mhm.
kind of learning in the options.
Yeah, yeah.
So you need the controlling the emotion is more like a bigger problem for me than
Mm,
anything else. So once I
mm,
do control
okay.
my emotions, I'm okay. For me,
Okay.
like trading, like finding a stock is not an issue. Finding a chart is not an issue. Do the charting is not an issue, but the psychology is an issue for me.
Mm,
So I'm working on
interesting.
because
Interesting. And mhm.
pattern is easy, very easy.
Yeah, yeah.
Psychology is very hard.
Oh yeah, I know for sure. And are you part of any like Discord groups, like trade groups or
No,
something?
I'm
No.
part of
Okay,
many.
interesting.
I'm part of many groups, but trust me, I don't read the messages. I read couple of the groups, which like the sides groups or the early wise groups, where I am kind
Mm,
of more active. Rest of the groups, I am
mm.
not actually.
Okay, okay, got it. Because I know there's like Discord groups, especially for options. I'm wondering if you checked them out or saw
Yeah,
them or
there
whatever.
are
Okay.
like pretty paid version as well. But
Yeah, yeah.
but for me, like if I'm paying somebody, but if I don't know how to get it, that means I'm depending on somebody else. And when you are
Mm.
depending on somebody else, you're not gonna go last longer.
Yeah, no, makes sense. You have to eventually become your own trader. No, I get it. Yeah,
Yes, right.
yeah,
So
yeah, yeah.
that like you don't want to develop a dependent personalities on others.
All right, right. Yeah, no, I get it for sure. Okay. No, thank you
Okay.
for that. Much appreciated.
Okay, yeah, no problem. Anybody has any question or concern?
No, thank
Anybody?
you so much. That's a
Yeah.
lot of information. I
Yes.
think
Yeah.
the video you will send will be helpful to review all this again.
Yeah, yeah. You will be able to go through the videos and try to see if you can kind of recall whatever we talked and try to learn the patterns. Try to draw the trend lines, whether it's the horizontals or the trend line, and whether it's right or wrong. Don't bother, but just try to draw it and correct yourself by using. Just try with the like a line chart, and then use the candle chart to make it easier for you to get hang of the trend line. Okay,
Yeah. Thank
and
you.
makes it easier for you. Okay, that's everything for today, and I hope you enjoy. And if you have any question or concern, please ask in the group, and I will try to help you out as much as I can. Okay, thank you so much everybody, and have a good night.
Thank you very much.
Good night. Good night. Bye.
Thank
Thank you.